So, big mortgage rule changes came out yesterday in regards to first time homebuyers. And then today we get an update that inflation is finally back down at that 2% target rate that the Bank of Canada has wanted to get it to. So, there's lots of things going on here, lots of things to dissect and talk about. Before we dive into this, my name's Miles Noak of the Noak Mortgage Team, powered by Indy Mortgage. And if you get value out of these videos or any of this content, do me that favor, hit that like and subscribe button so more people like you can see this video. And let's dive into it. Basically what happened is the Liberal government came out and said, we're going to make some changes to how we're helping first-time homebuyers. Now, I think this all kind of stems from when they first got in, said they were going to build 1.4 million houses, which they still haven't done. I mean, to be honest, 1.4 million houses is a big, lofty goal. But they came out with these rule changes, and they started off by saying, first-time homebuyers, you can get a 30-year amortization if you buy a brand new build house. Now, they kept the price cap at $1 million for first-time homebuyers who are buying with less than 20% down. So that kind of really didn't help many people at all. But now they doubled down on that, and they're saying any house a first-time homebuyer wants to buy, they can get a 30-year amortization. They've also increased the price cap from $1 million to $1.5 million. So if you've got less than 20% down, you can buy a house for up to $1.5 million, and you can get a 30-year amortization. And this all takes effect in December. I believe it's December 14th or 15th. But either way, it sounds like really good news. And there is some very immediate benefit to this. With these new rule changes, it means first-time homebuyers are going to have more options. They're going to be able to look at houses that they might not have been able to buy before. But there's also some cons to this as well. So when we want to take a look at how this can affect our economy and what this is going to do, we really need to be objective and sort of neutral when it comes to dissecting the data and information. So as mentioned, immediate benefits, first-time homebuyers. You've got a bit more options now. On top of that, it puts a first-time homebuyer into some different situations where they can pick what they're doing with their money and pick what they're doing with their cash flow. So, for example, if you look at it, a 30-year amortization is going to decrease your monthly payment. This is a good thing in some ways, but some ways it can be a bad thing. The longer your amortization, the more you're going to pay in interest. It's plain and simple. However, if we take a look at this and say, okay, well, I'm going to take that 30-year amortization to lower my payment, right? What am I going to do with that extra cash flow? That's the question. So a lot of people are going to take this as an opportunity to buy a house at a higher price tag, or to, put themselves in a position like most people do when buying a house, where you buy as big as you can. But for some people, it could create opportunity where they say, well, I'm not going to do that. I'm just going to increase my cash flow. And let's say you've got student debt or a car loan or anything like that. You could be in a position where you could lump that money towards those debts, paying them off more effectively and paying them off faster. Alternatively, let's say you don't have any debt you want to pay off. What does it look like if you take that money and put it into a TFSA or an RRSP to try and generate and build some wealth, where that account is being invested, making a return, where let's say you're allowing the returns to be added into the investment, therefore compounding the interest returns. I'm not going to take a deep dive into this. I've got a video in regards to compound interest. If you want to watch that, it's one of my earlier videos. It's right up here. Never mind. It's right up here. Either way, if you want to take a look at that video, there's a link for it in the description. But when we look at this, we're talking about first-time homebuyers. We're talking about young people buying houses, making investments and things like that, starting their lives. Really, you're out of school, you got your degree, you're ready to go, let's start our lives. Most of these people are coming out with student debt, credit card debt, car loans, student line of credit, all these different things. So this could put you in a position where you can pay those things off if you can get past the idea of buying a bigger house. On top of that, a lot of these people are coming out of school and they haven't started these retirement saving plans and things like that. And from a self-employed person, let me tell you, start now. If you're young, start now. So I don't think this is an opportunity that people should be looking at going, oh, I can buy a bigger house. This should be something where we're looking at it going, hey, I can increase my cash flow, allocating my money into other avenues to try and make myself more financially prepared for the future. Those are the immediate benefits of this program. Now, when we talk about the cons of the program and the cons that could come up with this. So I'm going to go through a list here. It's pretty extensive. And if I'm being honest with you, I think there's more cons than pros. Now, to just get it right out of the way, I am a mortgage broker. So these new rules have a direct impact on me and my business. And to be honest with you, it's a really good impact. It's going to be easier for me to do these mortgages. It's going to allow me to do more mortgages and provide more approvals than declines. It's going to directly impact my income. So when I tell you that I think this might not have been the best choice of plan, I mean it. So let's dive into some cons of this program and try and dissect what it could mean for the future. As mentioned, we've got some pretty immediate benefits, right? We've talked about those, right away we're getting benefit. But I want to look at this down the road too and say, what's it going to look like in the next couple of years? So the first thing we want to talk about is inflation and house prices. Essentially, what this is going to do is put more pressure on the market because more people are going to have access to those homes. We have a supply and demand issue. It's plain and simple. It's easy to see. But now, instead of building more homes, we've just given people access to these homes where, they didn't have access before. So, and I've said it before, I love the idea of accessible housing for people. I think a home is a crucial part for a human being's life. I don't think making it easier to get the house was the right play. We were seeing declines on purchase prices. We were seeing values go down. And all this has really created is a false floor when it comes to the bottom price of a house. Now it doesn't matter. We can buy those houses. We can move more aggressively with buying houses, yet we haven't increased the supply and we still have that pent up demand. So now we've just increased the demand. And my big fear behind this is it could create bidding wars. It could create FOMO. It could create all these things that caused us to see those house prices jump up really drastically and dramatically when we had those very low interest rates. Now, when I talk about this sort of stuff, my big fear is that we're going to see price pressure increase on homes. We're going to see the purchase price increase. And all that's going to do in the long run is make houses less affordable for young buyers and first-time home buyers. It's going to make homes less affordable for those people looking to get out of their starter home and move into that bigger house with their family. And I'm a firm believer in the starter home. My first house was a 50-year-old box in a, semi-crappy neighborhood that wasn't great. Now, I'm in a significantly nicer house in a significantly nicer neighborhood. I worked my way up to that. I didn't just jump to granite countertops. I started with, plywood with some, duct tape over top of it. I'm just kidding. It wasn't that bad. But I started off in a home that was not what I wanted, but exactly what I needed. Because you don't always get what you want. But if you try sometimes, you just might find you get what you need. Am I allowed to do that on YouTube? Like, I know I'm quoting a song. If someone knows, comment below, please. Am I in trouble? I don't know. But either way, I think there are some risks with this, but I think it could provide some benefit. And I think if we look at it objectively, I think the immediate benefit is obvious, but the long-term risk is pretty substantial. Because if all of a sudden we get to a point where it's like, oh, we can have 30-year amortizations and the prices increase, well, where do you go next? The other con we want to look at with this is the cost of the mortgage over 30 years. Essentially, we're putting Canadians and young buyers in more long-term debt. The longer it takes you to pay off your mortgage, the more interest you're going to pay. And on top of that, when you're paying your mortgage, the amount of interest you pay at the start is significantly higher than the amount of interest you pay near the end. So this puts you in a position where you could essentially, let's say in 3 years, you need to make a change of employment, you need to sell the house and move or anything. You will probably have less equity in that house. The other big question behind this is, what is CMHC's Sagen or Canada Guarantee going to do in regards to the actual insurance premiums they're charging on these longer amortizations? Is it going to increase? So as it stands right now, if you put 5% down on a purchase price, you have to have it insured, and that insurance premium gets tied into your mortgage, adding to the balance. So if you put 5% down, it doesn't mean you have, 5% equity in your home. You have less. So let's say you're putting 5% down and the other 5%, 4% of it's getting chewed up by an insurance premium. That means you have 1% equity in that home. We're getting really close to 100% financing. And if any of you recall from 2007, 2008, that didn't really end well for the United States. So there is some fear in my mind behind that. I think it's something we really need to pay attention to. Now, all of this being said, we want to talk about inflation. I'm going to give you a quick little snippet update. I know I should be doing a full video on inflation. It's really big news, but I think the other stuff is more important. Inflation's down to 2%. This is fantastic. It gives the Bank of Canada more ammunition to cut rates, which is great. We want to see those variables continue to go down. We want to see inflation get nice and stable. We want to become a stable economy. And this is a step in the right direction yet again. Now, a lot of people are saying that we're going to see jumbo rate cuts from the Bank of Canada. If we look back, those jumbo rate cuts only really happened when unemployment was at like 10% or, for example, during COVID. So I don't think we're going to see jumbo rate cuts. I think they're going to stay the course and do quarter point cuts, but I think we could see more back to back to back to back. And it does put us in a position where maybe looking at those variable rate mortgages is a good option. So to summarize this video, the new rules from the Liberal government in regards to, first-time home buyers. Is it good? Right away, yes, but in the long term, probably not. And the question is, did they do this to help first-time home buyers, or is this them trying to get more votes? I mean, if I was to guess, I'd say it probably is a little bit involving the votes. Just my thoughts behind it. And when it comes to inflation and jumbo rate cuts, I think we're going to keep seeing cuts. I'm not sure we're going to see jumbo cuts, but I think we're in a pretty good spot where we can confidently say we're going to see more rate cuts. Once again, my name is Miles Noah for the Noah Mortgage Team. Thanks for sticking around with me and watching my video. If you have any questions or any thoughts or anything like that in regards to these new rules or inflation or where rates are going to go, post them in the comments below. Let me know your opinion. I'd love to hear what you have to say. Thanks so much for tuning in. We'll catch you next time.